Okay, so this week, right?
Mhm.
It felt like every time you check the market, it was like reacting to some global news flash,
Yeah.
up, down, sideways, just a wild ride.
Roller coastering.
It really was. So we are diving into two sources today
Yeah.
to try and understand what is going on.
Right.
We've got a financial market report and then a really deep analysis of all this crazy volatility.
Cool. So, like, where do we even start?
Well, I think a good place to start would be the Fed tapping the brakes on those rate cuts.
Okay, yeah, that's been a big story.
It has been.
Yeah.
It has been, and it's had like a chain reaction, especially when it comes to currencies.
Yeah. Like, think of it this way. The US dollar, right? It's surging like crazy.
Yeah.
And that is sending other currencies like tumbling down.
Yeah.
You got the euro, the British pound, the Japanese yen,
Yeah.
even the Indian rupee hit a record low.
Hmm.
It's wild.
So this all might seem like, okay, just numbers changing on a screen. But how does this actually affect, like, someone who isn't a currency trader?
That's the key question, right? Because these shifts, they can hit your wallet directly.
Okay.
Like the price of things you buy from overseas,
Yeah.
even your travel plans, it can all be affected.
Wow.
And then, you've got central banks globally, they're scrambling, trying to figure out like what to do.
Yeah. So let's break that down a little bit.
Oh,
What's happening in Japan? Because they're dealing with a weakening yen, right?
mm.
But also rising inflation at the same time.
Yeah, it's a tough spot for them. So their core inflation, if you don't count food and energy,
Okay.
that's at 2.4%.
Okay.
But then if you factor in energy, that number jumps to 2.7%.
So, I mean,
So it's significant.
yeah, it is.
And I think in Japan, they decided to keep interest rates steady for now.
Okay.
But a lot of experts are saying they're going to have to, like, get more aggressive in 2024.
To really control that inflation.
Exactly.
Yeah. How about Europe? I know they just cut rates.
We did.
But a strong dollar, that could really mess things up for them. Right?
Exactly. The dollar and the euro, they're practically at a 1.1 parity now.
Hmm.
And this could force the European Central Bank to, slow down their rate cuts.
Right.
Even though they're worried about weak growth. So
Right. So they're stuck between a rock and a hard place.
exactly. Yeah. Tough balancing act for them.
Yeah. Meanwhile, China seems to be going in like the complete opposite direction.
Right.
They're easing up on their monetary policy.
Yeah, they're moving towards what they call moderate easing.
Okay.
And they're even thinking about increasing their deficit target. But the big question is, can they boost their economy without, like, sending the yuan into a total free fall?
Risky.
Risky.
Okay. And then we
Yes.
got India.
Yeah.
Their economy's slowing down, but inflation is already a concern. So
It's tricky, right?
Yeah.
So their inflation in November was 5.48%,
okay.
which is above their 4% target.
Yeah.
It even, like, spiked to 6.2% in October.
Oh.
So, they're under pressure to cut rates to help the economy.
Yeah.
But doing that could actually make inflation even worse.
Yeah. No easy answers there.
Yep.
Okay. So the Fed's moves are like causing this global ripple effect, but
Yeah.
buckle up because we are about to add another layer of complexity to this roller coaster. Trump's trade tactics.
It's really interesting, isn't it?
Yeah.
How these global financial forces, they kind of get all tangled up with political decisions.
Yeah.
So Trump's latest move is to threaten tariffs on European goods
Okay.
unless they agree to buy more American oil and gas.
It sounds like that will definitely increase the tension.
Oh, yeah.
But how is this about more than just tariffs?
What's a power play
Okay.
in the energy market? So Europe's energy costs, they're already crazy high, right?
Yeah, because of the war in Ukraine.
Exactly.
Yeah.
And this tactic from Trump, it could actually make things even worse for them.
Wow.
But the U.S., they see this as an opportunity. They want to be Europe's main energy supplier.
So it feels like we're just seeing the beginning of this strategy.
Yeah, it does feel that way.
Like, what else could Trump demand from Europe down the line? And then what about the impact closer to home, like in North America?
Right. Well, Canada's already feeling the heat.
Yeah.
All these tariff threats they've created, like this political firestorm up there.
Really?
Yeah, their finance minister even resigned over it.
Oh, wow.
And Canadian manufacturers are really on edge right now.
What are they most worried about?
Well, nearly half of them that were surveyed,
Okay.
they said they're thinking about either freezing hiring
Okay.
or cutting jobs because of all this uncertainty. And almost as many are saying they might delay investments too.
Wow. So the stakes are pretty high for Canada. So they're talking about like retaliating by taxing U.S. imports.
There's some talk about that, but they see that as like a last resort.
Okay, so how is Mexico responding to all of this?
They're not backing down at all.
Okay.
They're threatening their own countermeasures. And they're pointing out how much U.S. automakers rely on Mexican production.
Right.
They estimate 400,000 U.S. jobs could be at stake.
Wow, that's a huge number.
It is.
This whole situation really shows, like, how connected the global economy is
It does.
and how one seemingly isolated action
Yeah.
can, like, trigger consequences worldwide.
Domino effect.
Exactly. Okay, so we've talked about the global impact,
Mhm.
but let's zoom in on the U.S. market specifically.
Okay.
How did things play out this past week?
Well, it was like a roller coaster ride for sure.
Yeah.
The U.S. market, we saw some pretty steep drops earlier in the week.
Okay.
But by Friday, it managed to, claw back some of those losses.
So a bit of a rebound.
Yeah, a bit of a rebound.
But still, like, kind of a wild ride.
Yeah, a wild ride for sure.
Yeah. Did any particular sectors, like, stand out?
Actually, real estate performed pretty well,
Really?
which is, a little bit surprising given the whole interest rate environment right now.
Yeah.
But on the other hand, consumer staples, they
Yeah.
kind of lagged behind.
Okay, so now everyone's been watching inflation very closely.
Yeah.
What did the November PCE report tell us?
Well, there's some good news there. The PCE report showed that inflation is, starting to cool down a bit.
Okay.
And what's really interesting is that the annualized inflation rates for both the past 3 months and the past 6 months,
Okay.
they're actually pretty much in line with what a Fed projected for 2024.
Interesting. So does that mean that the market expects, like, more rate cuts in 2024
Potentially, yeah.
than initially predicted?
Yeah, if inflation keeps trending downwards,
Okay.
the Fed might decide to make more than just those 2 rate cuts they've currently got projected for 2025.
Okay, so let's shift gears for a moment
Okay.
and take a closer look at what's happening in the pharmaceutical industry.
All right.
Novo Nordisk, which is a big player in weight loss medications.
Right.
They had a pretty rough week.
Yeah, they did. Their stock took a big hit.
Yeah.
It dropped 18% after their new weight loss drug. It didn't actually meet its targets in clinical trials.
Ouch, that's got to be tough.
Yeah.
This really highlights, the risks that are involved in pharmaceutical investments.
Big time. One trial
Yeah.
can just make or break a company.
Yeah, absolutely. But as they say, one company's loss is another company's gain.
Right.
So,
Eli Lilly.
yeah.
They've got a competing weight loss drug called Zybone,
Okay.
and their stock actually surged
Oh, wow.
on the news of Novo Nordisk's setback.
It's like a constant race in this industry.
It is, yeah.
With winners and losers emerging with, every new trial result.
Absolutely.
Okay, before we wrap up this part of our deep dive,
Okay.
let's just take a quick look at the overall weekly performance
Right.
of the U.S. market. And it seems like declines were pretty widespread.
Yeah, all the major indexes, the Dow, the S&P 500, and the NASDAQ, they all finished the week in the red.
Okay.
The Russell 2000, which is, super sensitive to interest rate changes.
Right.
That one got hit the hardest. It dropped 4.45%.
Oh, wow. And how did the different sectors perform?
Well, energy and real estate, they took the biggest hits,
Okay.
which isn't really surprising given all the fluctuations we've seen in oil prices and interest rates.
Right.
But on a more positive note,
Yeah.
technology and utilities,
Yeah.
they actually showed some resilience.
Interesting. Okay, so quick snapshot. What happened with other key indicators like bond yields, oil, Bitcoin, gold, all that stuff?
Okay, so bond yields, they went up,
Yeah.
which suggests that investors are moving away from riskier assets.
All right.
Oil prices, they dipped a bit. Bitcoin took a bit of a tumble.
Mm.
And gold, it stayed relatively stable.
Okay, so really a mixed bag,
Yeah, definitely a mixed bag.
reflecting all the uncertainty in the market.
For sure.
Okay, so we've unpacked a lot here, but
Yeah.
what does this all mean for 2024? What's the outlook?
Well, I think if this week is any indication,
Yeah.
2024 is shaping up to be another pretty volatile year.
Oh.
The Fed's actions and Trump's unpredictable policies, it's likely to keep those markets on edge.
Yeah, those are two big wild cards for sure.
Yeah.
But, history tells us that the market tends to recover eventually.
That does.
Even after periods of, real turmoil.
It does, yeah.
So that's a reassuring thought.
Yeah.
But are there any particular risks that investors should be watching out for?
Definitely keep a close eye on the labor market.
Okay.
It's been surprisingly strong so far,
Yeah.
but there are some, little signs of weakness starting to emerge.
Mm.
So if unemployment starts to rise,
Yeah.
that could create a real ripple effect throughout the market.
Okay, so potential bumps in the road ahead.
Yeah, I think so.
But are there any bright spots? Any reason for optimism as we head into the new year?
Absolutely. The strong dollar that we were talking about earlier,
Right.
that could actually attract foreign investment,
Hmm.
which could be good news for the U.S. market.
Okay, so potential upside amidst all the uncertainty.
That's good.
Any final words of wisdom for investors as they try to navigate this really complex landscape?
I would say stay alert for opportunities
Okay.
during those market dips, you know.
Yeah.
That's when savvy investors can find some real bargains.
Right. Buy low, sell high.
Exactly. And as always, diversification is key. Don't
Mhm.
put all your eggs in one basket.
Sound advice.
Thank you.
Now, something I found particularly interesting this week was like how different parts of the market reacted to the Fed's announcements.
Oh, yeah.
It seemed like the bond market had already kind of anticipated the Fed's like more cautious approach, while the stock market was kind of taken by surprise.
Yeah, that's a great observation. It just shows that, different parts of the market, they process information and assess risk in their own way.
Right.
So the bond market, right, they're really focused on inflation and interest rates.
Right.
They probably saw the writing on the wall and adjusted accordingly.
Okay.
The stock market, on the other hand, it tends to react more emotionally to news and events.
It's like they were caught a little off guard.
Yeah, in a way, yes. And this difference in reaction, it's a good reminder
Yeah.
that simply following headlines isn't enough.
Right.
You have to dig deeper.
Yeah.
Try to understand the underlying dynamics.
That's such a great takeaway for our listeners. So how can investors, get a better grasp of these different perspectives and motivations within the market?
That's where, having access to in-depth analysis of what we do here on the deep dive
Right.
can be so valuable. It helps you connect the dots
Yeah.
and make more informed decisions.
Right. Okay, speaking of connecting the dots, let's talk about technical indicators.
Okay.
Because those can provide like valuable insight into like investor sentiment
Yeah,
and potential turning points in the market.
absolutely. They can help us gauge like how investors are feeling and how that translates into like their buying and selling decisions.
Yeah.
So let's start with market participation levels, which tell us like what percentage of stocks are actively moving with the market.
Right. So on Thursday, we saw that the percentage of stocks that were trading above their 20-day moving average was like really low,
Okay.
below 8% for the S&P 500.
Wow.
But after Friday's rebound, those numbers improved. So the S&P climbed to 11%, the Russell 2000 to 14.5%, and the NASDAQ even reached 25%.
That's interesting. Even though those numbers did improve, they're still, relatively low compared to historical data.
Right?
And believe it or not, that can actually be a positive sign.
Really? How so?
It suggests that there's a lot of cash just sitting on the sidelines waiting to be invested.
Okay.
So if investor confidence grows, all that money could flow back into the market, pushing prices higher.
So low market participation
Yeah.
could actually be a sign of like
Pent-up demand.
pent-up demand.
Yeah.
Okay, that's kind of counterintuitive, but fascinating.
It is, yeah.
Okay, so what about other sentiment indicators, like the fear and greed index? It felt like fear was the dominant emotion this past week.
Oh, yeah, absolutely. Both the S&P 500 momentum index and the market breadth indicators, they were signaling extreme fear.
Okay.
In fact, the market breadth index, it hit its lowest point for all of 2023.
Oh, wow.
Yeah. And we also saw like elevated put call ratios,
Right.
which basically measure the volume of bets on a decline
Right.
versus bets on a rise.
Right.
And this further confirms that
That fear.
that risk-averse sentiment in the market.
Yeah, okay, so a lot of fear and caution out there.
Yeah.
But I vaguely remember seeing like some positive signals in the daily data on advancing versus declining stocks. So was there a shift on Friday?
Yes, there was. So for several weeks, the S&P 500 had been showing more declining stocks than advancing ones.
Right.
But Friday's rebound brought a pretty notable change.
Okay.
395 more S&P 500 stocks rose than fell that day.
Okay.
So that's a sign of improving market breadth.
Okay, so a glimmer of hope amidst the fear.
Yeah, I think so.
It seems like these technical indicators are kind of sending mixed signals,
They are, yeah.
just reflecting that overall uncertainty in the market.
Exactly. That's why it's so crucial to consider both, fundamental factors
Right.
like the economic data we talked about earlier and technical analysis.
Right. So you need both sides
Yeah,
of the coin.
when you're assessing the market.
Yeah, makes sense. Okay, so speaking of economic data, are there any key data releases coming up that investors should, kind of have on their radar?
Well, inflation data is going to be really crucial.
Okay.
We've seen some encouraging signs of cooling inflation,
Right.
but the December and January inflation numbers, they're going to be very closely watched by the Fed.
So if inflation starts to rise again, does that mean the Fed might have to get more aggressive?
Yeah, potentially. Yeah, that's a definite possibility.
Okay.
Another key area to monitor is the labor market. We've been seeing some rumblings about potential layoffs in certain sectors.
Right.
So if unemployment starts to tick up,
Yeah.
that could spook investors.
Okay, so inflation data and the labor market, two crucial areas to watch
Yep.
in the coming months.
For sure.
Now, amidst all this talk of potential risks, let's not forget about the opportunities that might arise.
Right. There are always opportunities, even in uncertain times.
Yeah, absolutely.
So, for example, those high-growth, high-valuation companies
Yeah.
that have been hit hard by rising interest rates,
Right.
those could actually present a buying opportunity,
Okay.
especially if inflation keeps cooling
Right.
and the Fed eases up on its rate hikes.
Yeah, then those growth stocks,
They could come roaring back.
they could come roaring back, but
But yeah.
investors need to do their homework
Oh, absolutely.
and really understand the risks before jumping in. Okay, now before we move on, I just wanted to emphasize another really important factor that emerged from our analysis this week.
Okay.
And it's the power of market psychology.
Yes. The often overlooked but incredibly powerful force
Right.
that can drive market movements.
Yep. It's not just about the numbers. It's not just about the data.
Right.
It's about understanding how investors are feeling, what they're thinking, and how those emotions can translate into, buying and selling decisions.
And sometimes those emotions can lead to some pretty irrational behavior,
Right.
creating both risks and opportunities.
Exactly. So what are some of the psychological factors that could come into play in 2024?
Well, first of all, I think there's this lingering sense of uncertainty
Yeah.
and anxiety that's been hanging over the market for most of this year.
Right.
Geopolitical tensions, economic headwinds, unpredictable policy moves. It's created a sense of unease.
It's like everyone's waiting for the other shoe to drop.
Exactly. And that can lead to overreactions to news, both good and bad.
Right. And that brings us to another classic psychological factor.
Yeah.
The fear of missing out or FOMO.
The dreaded FOMO. Yeah.
Right. Even in a volatile and uncertain market,
Yeah.
there's always that risk that investors will get caught up in the hype and chase returns,
Right.
fearing that they'll miss the next big rally.
Exactly. The classic driver of speculative bubbles.
Right.
Yeah. And that can lead to overvaluation and just irrational exuberance,
Yeah.
setting the stage for a potential correction down the road.
Okay, and then there's the opposite emotion,
Right.
the fear of loss.
Yeah. When the market tanks,
Yeah.
investors can get so spooked
Yeah.
that they just sell everything, even if it means locking in losses.
Right.
And that panic selling, it can actually worsen market downturns, creating a self-fulfilling prophecy.
It's amazing how these psychological factors can really interact with the fundamental and technical data
yeah.
we've discussed to shape market movements. It's all connected.
It really is. So understanding these dynamics, it's essential for any investor who wants to make informed decisions.
100%.
So for our listeners who are trying to make sense of all of this,
Huh.
what are some key takeaways about market psychology?
All right, well, first of all, just recognize
Yeah.
that emotions play a huge role in the market.
Yeah.
Don't underestimate the impact of fear, greed, and uncertainty on investor behavior.
Right. It's about understanding that human element.
Exactly. And then second, be aware of your own biases and emotional tendencies.
Right.
Are you prone to FOMO? Do you panic easily? Knowing your own weaknesses can help you avoid those impulsive decisions.
So it's all about self-awareness
Self-awareness, yep,
and emotional intelligence when it comes to investing.
absolutely.
Okay, so what's the third takeaway?
The third takeaway is don't let emotions completely cloud your judgment.
Okay.
While it's important to acknowledge the psychological factors at play, don't abandon your fundamental and technical analysis altogether. It's about finding the right balance between the head and the heart
Exactly.
when making those investment decisions.
It's all about balance.
Yeah, absolutely.
Yeah.
Now, let's zoom out and look at the bigger picture.
Okay.
We've discussed a lot of short-term drivers of market volatility.
Right.
But what about the long-term trends
Right.
that are shaping the investment landscape?
It's easy to get caught up in the day-to-day swings,
Yeah.
but it's important to remember that that's all just like ripples on the surface,
Yeah.
you know?
Yeah, absolutely.
So let's explore some of the key long-term trends and their potential implications for investors.
Okay.
So one of the most significant trends
Yeah.
is the rise of emerging markets.
Okay.
As economies in Asia, Latin America, and Africa,
Oh, yeah.
as they continue to grow,
Right.
they're becoming increasingly influential on the global stage.
Right. We've seen a lot of investment flowing into emerging markets.
We have.
And that trend seems likely to continue.
It does, yeah. So this presents both opportunities and challenges for investors.
Right.
On one hand, emerging markets offer like the potential for high growth
Okay.
and diversification.
Right.
But on the other hand, they come with higher risks,
Yeah.
like political instability and currency fluctuations.
So it's a high-risk, high-reward scenario.
Exactly. And that's why it's crucial for investors to do their research
Yeah.
and carefully assess the risks and rewards
Right.
before, diving into emerging markets.
Good advice. Okay, so what other long-term trends are on your radar?
Well, the ongoing technological revolution,
Yeah.
it's a major one. Advances in artificial intelligence, cloud computing, biotechnology, renewable energy,
Yeah.
they're transforming industries and creating new investment opportunities.
Right. It's about finding like the next big thing,
Yeah.
the future Googles and Amazons of the world.
Exactly.
But it also requires understanding the risks too, right?
Oh, absolutely. The tech sector can be very volatile.
Yeah.
And not every innovative company will be a winner.
Right.
Investors need to strike a balance
Yeah.
between identifying potential winners and managing risk.
Okay, so speaking of balancing, the increasing importance of sustainability
Yes.
is another major trend.
As the world grapples with climate change and other environmental challenges, investors are increasingly looking for companies that, operate responsibly
Yeah.
and sustainably.
Yeah, absolutely.
So ESG investing, which focuses on those environmental, social, and governance factors, has become a significant trend.
Right. It's about aligning your investments with your values
Yeah.
while still seeking financial returns.
Exactly.
Okay.
And then lastly, we can't overlook the changing demographics of the global population.
Right.
As populations age in developed countries and birth rates decline,
Yeah.
there will be significant implications for various industries.
Yeah, like healthcare, consumer goods, real estate.
Yep, all of those.
We're already seeing those trends playing out, and
Yeah.
they'll likely become even more prominent in the years to come.
Oh, absolutely, yeah.
So what's the bottom line for investors who are just like trying to make sense of this complex and constantly changing investment landscape?
Stay informed,
Okay.
stay disciplined, and stay focused on your long-term goals.
Okay. Right.
The market will always have its ups and downs.
Yeah.
But if you stay the course and make smart decisions,
Right.
you'll be well positioned to achieve your financial objectives.
Excellent advice. Okay, now, before we wrap up this part of our deep dive,
Gotcha.
I wanted to leave our listeners with something to think about,
Right.
a question to ponder
Okay.
as they continue exploring the markets.
I'm all ears.
We've discussed a lot of factors that influence market movements, like the Fed's policies,
Right.
inflation data, technical indicators.
Uh-huh.
But what if there's something even more fundamental at play?
Okay. Intrigued. Go on.
What if the real driving force behind the market, the ultimate decider of whether stocks go up or down,
Yeah.
is simply human nature?
I see what you're getting at.
Yeah.
The idea that despite all of our sophisticated analysis
Yeah.
and complex models,
Right.
the market is ultimately driven by those same basic human emotions that have been shaping our behavior for centuries.
Right.
Fear, greed, hope, despair.
Exactly. And if that's true, maybe understanding the market isn't just about mastering technical analysis
All right.
or predicting economic data. Maybe it's about understanding ourselves,
Yeah.
our own biases,
Yeah.
and how those affect our decisions, both as individuals and collectively.
That's a profound thought, Picking up where we left off, let's circle back to the Federal Reserve for a moment.
Okay.
It wasn't just their policy decisions that created a stir in the market.
Right.
It was also the way they communicated those decisions.
Yeah, it's like they're trying to steer this massive ship through really choppy waters, and they got to be so careful
Yeah.
to avoid any sudden jolts that could, cause panic.
That's a great way to put it, The Fed, they have this really delicate balancing act of trying to like influence the market without creating unnecessary volatility.
Right.
And what really struck me was their emphasis on data dependency.
Right. They kept saying, future decisions will hinge on incoming economic data, especially on inflation.
Exactly, exactly. And, this subtle shift in their messaging, it suggests a certain flexibility.
Okay.
They aren't like locked into a rigid plan,
Okay.
but they're ready to adapt their policies based on, how the economy is actually performing.
Yeah, so it's more about reacting to like real-time data
Yeah,
than sticking to a predetermined course.
precisely.
Yeah.
And given the mixed signals we're seeing in the economy right now,
Yeah.
with inflation still high but cooling, and the labor market strong but showing some cracks,
Right.
it makes sense for them to be more, agile.
Yeah, I mean, they need to be ready to like adjust on the fly.
Yeah, absolutely.
Okay, so this focus on data, um, it also really emphasizes the critical role of economic forecasting.
It does, because if the Fed is basing its decisions on data,
Yeah.
being able to predict that data accurately becomes even more crucial.
Yeah, but that sounds like a really tough job.
It is.
Like trying to predict the weather months in advance.
You hit the nail on the head.
Yeah.
Economic forecasting is inherently difficult, especially with so many global variables.
Right.
And yet the Fed has to make these decisions, with huge economic consequences
Right.
based on these forecasts.
Yeah, it seems like they're walking a tightrope.
You could say that. It really underscores the need for like humility
Yeah.
and careful consideration
Yeah.
in both forecasting and policymaking.
Okay, well, speaking of forecasting, let's move on to another type that investors follow very closely. Company earnings forecasts.
Yes, the quarterly guessing game
Yeah,
of how companies are performing.
exactly. And these forecasts can like really impact stock prices.
Oh, absolutely.
Especially in a market that's, as volatile as ours is right now.
Yeah.
So a company that, exceeds expectations, their stock can soar.
Yeah.
But one that falls short might face a steep decline.
That's why it's so crucial for investors to go beyond just the headline numbers. They need to like dig into the details of the earnings reports and assess the true health of the business.
So it's about analyzing trends, margins, cash flow, all
Exactly.
those factors that really contribute to long-term profitability.
Yeah, it's a lot more than just following the latest like hot stock tip.
Right. It requires like real financial literacy.
It does.
And analytical skills.
For sure.
Investors need like a solid understanding of business operations and how to evaluate financial performance.
Absolutely. And this brings us back to a key theme, education
Education.
and continuous learning.
Yes, absolutely. In such a complex and dynamic world, knowledge really is power.
It is. It is.
The more you understand about the markets, the economy, the driving forces behind them,
Yeah,
the better equipped you'll be to make those informed investment decisions.
for sure.
That's precisely why we do what we do here on the Deep Dive, is to provide you with the insights,
The context.
the context you
Yeah.
need to navigate this complex world.
Absolutely.
And we encourage our listeners to, keep learning, even beyond our podcast.
Yeah.
Read books, explore articles, attend webinars. There are so many resources available.
There are. Yeah. The more
Yeah.
you learn, the more you grow as an investor.
And speaking of growth, there's another layer to this conversation,
Okay.
and it's human behavior, particularly when it comes to investing.
Yeah, it's fascinating how
Yeah.
human psychology can really influence the markets.
Okay, so let's think back to the Federal Reserve's recent meeting.
Yeah.
Different people interpreted their message in different ways.
Right.
It created confusion, mixed signals. It's like a game of telephone
Yeah.
where the original message just gets like distorted along the way.
That's a great analogy. And the Fed's communication strategy is so important
It is.
because they're trying to influence market direction
Right.
without causing panic,
Right. It's like they're walking a tightrope.
Yeah.
They're trying to guide the market without spooking it.
Exactly.
So what are some of the key psychological factors that might like influence market dynamics in the coming year?
Well, I think the uncertainty and the anxiety that we've been talking about,
Yeah.
that's likely to persist.
Okay.
This combination of geopolitical tensions, economic concerns, and unpredictable policy moves.
Yeah.
It's a recipe for nervousness among investors.
It is. It's like a perfect storm of anxiety-inducing factors.
Yeah, exactly.
So this can lead to, like, overreactions to news,
It can.
both good and bad.
Both good and bad.
And that brings us back to another classic psychological factor.
Right. FOMO.
FOMO, the fear of missing out.
The fear of missing out.
Yeah,
Even in a volatile market, there's that fear of missing the next big rally.
right. And that can drive investors to make impulsive decisions.
Right. And that can lead to like asset bubbles
Yeah.
and overvaluation,
Yeah, exactly.
setting the stage for a potential correction.
Yeah, you get those boom and bust cycles.
Right. So it's not just about like avoiding the negative news. It's also about managing our reactions to positive hype.
Absolutely. You got to stay level-headed.
Yeah.
No matter what's happening in the market.
Okay. And then on the other side of the spectrum, we also have to consider the fear of loss,
The fear of loss, right?
which could be just as powerful.
Well, absolutely. When the market takes a dip,
Yeah.
that fear, it can lead to, like, panic selling,
Right.
even if it means locking in losses. Right. You're so afraid of losing even more
Yeah.
that you just sell everything.
Exactly. And that panic selling can actually exacerbate downturns,
Wow.
creating a self-fulfilling prophecy.
Yeah, it's amazing how these, like, psychological factors, they intertwine with the fundamental and technical data we've discussed.
Oh, yeah.
It's really all connected.
It is.
Understanding these dynamics is crucial for making smart investment decisions.
It really is.
So for our listeners, what are, like, some key takeaways about this human element of the market?
Okay, so first of all, acknowledge that emotions play a huge role.
Okay.
Don't underestimate the impact of fear, greed, and uncertainty on both individual and collective decision-making.
Right. It's about recognizing that the market is driven by people with all their complexities.
And their emotions.
And emotions, exactly.
Yep.
Okay, so what's the second takeaway?
Second, try to understand your own emotional tendencies,
Yeah.
Do you tend to, like, panic and sell? When the market dips, do you get caught up in the hype and chase returns?
Yeah.
Knowing your weaknesses can help you make, like, more rational decisions.
So self-awareness is key.
Self-awareness is key, just like you mentioned earlier.
Yeah.
Absolutely, yeah.
And what's the third takeaway?
The third takeaway is don't let emotions completely cloud your judgment.
Okay.
While it's important to acknowledge the psychological factors at play, don't abandon your fundamental and technical analysis.
Right. So it's about finding that sweet spot between
yeah.
trusting your gut
Yeah.
and relying on the data
And the analysis.
and the analysis.
It's all about balance.
Yeah, it really is all about balance.
Yeah.
Now, let's step back and consider the broader implications of these market movements.
Okay.
We've talked a lot about short-term volatility, but it's important to remember that markets move in cycles.
They do. It's like looking at the waves on the ocean,
Yeah,
You can get caught up in the choppy waters
right.
where you can look beyond that.
Yeah.
To the tide and the currents that are shaping the overall flow.
That's a great way to think about it.
Yeah.
Well, the short-term fluctuations can be distracting.
Oh, they can be very distracting.
It's the long-term trends that ultimately shape the investment landscape.
Exactly.
And there are a few key trends that I think are worth paying close attention to.
Okay. Which ones are at the top of your list?
Well, the rise of sustainable investing, that's definitely one to watch.
Yeah, absolutely.
As environmental, social, and governance factors, ESG become increasingly important to investors.
Yeah.
We're seeing a shift in capital allocation towards companies that prioritize these values.
It's not just about making money anymore.
Yeah.
It's about making a positive impact.
It's about aligning your investments with your values.
Exactly.
And seeking those financial returns.
Absolutely.
So what other trends are shaping the market?
Well, another significant trend is the growing interest in alternative investments.
Okay, what are some examples of alternative investments?
So we're talking about things like private equity,
Okay.
real estate commodities, and even cryptocurrencies.
Right.
These asset classes, they tend to have a low correlation with traditional markets, which it can help to, like, reduce overall portfolio risk.
Okay, so you're not putting all your eggs in one basket.
Exactly.
But aren't these alternative investments often more complex?
They can be.
And less accessible to the average investor?
That's true. but there are increasingly more options becoming available to individual investors.
Okay.
Like exchange-traded funds or ETFs
Right.
and mutual funds that focus on specific alternative asset classes.
So that's good news for those looking to, like, expand their investment horizons.
It is. It is.
Okay,
Yeah.
cool. Any other trends you'd like to highlight?
Well, one that's often overlooked but incredibly important is the increasing focus on financial literacy
Yes.
and education
Yes.
as the investment landscape becomes more complex
It does.
and the options more diverse.
Yeah.
It's essential for individuals to develop the knowledge and skills
Right.
they need to make informed decisions.
Yeah, it's not enough to just, like, blindly follow the latest hot stock tip or trust someone else to manage your money
Right.
without understanding what's going on.
Exactly.
Yeah.
Exactly. The more you understand about how the markets work,
Right.
the different asset classes, risk management,
Yeah.
the importance of long-term planning,
Yeah.
the better equipped you'll be to navigate those challenges
Right.
and seize the opportunities that lie ahead.
I couldn't agree more. So where can investors turn to enhance their financial literacy?
Well, there are tons of great resources available,
Yeah.
both online and offline,
Yeah, okay.
reputable financial websites,
Yeah.
books, podcasts,
Right.
like this one,
Like this one, yeah.
financial advisors, and even, community college courses can provide valuable insights and information.
That's a great point.
Yeah.
So many options.
Yeah.
Okay, so I'm curious, what are some of the biggest mistakes that you see investors making,
Okay.
especially those who might be newer to the market?
One of the most common mistakes is letting emotions drive investment decisions,
Okay.
whether it's fear, greed, or FOMO.
Right.
Letting those emotions take over
Yeah.
can lead to impulsive buying or selling at the wrong time.
It's like that saying, buy high, sell low.
Yeah.
Which is like the exact opposite.
The opposite of what you should be doing.
Precisely.
Yeah.
Another common mistake is failing to diversify their portfolio.
Oh.
Putting all your eggs in one basket.
Right.
Whether it's, a single stock, industry, or asset class.
Right.
Can expose you to significant risk.
So spreading your investments across different asset classes can help to, mitigate that risk. Exactly. And another mistake I often see is failing to develop, a clear investment strategy,
Okay.
without a well-defined plan.
Right.
It's easy to get sidetracked by, the short-term market noise
Yeah.
and make decisions that aren't really aligned with your long-term goals.
It's like setting out on a journey without a map.
Yeah,
You might end up somewhere,
right.
but it might not be where you intended to go.
That's a great analogy. Having, a clear investment strategy, including your financial goals, your risk tolerance, your time horizon,
Yeah.
that can really help you stay focused
Right.
and make more disciplined decisions.
Okay, so those are some really valuable insights.
Yeah.
So what other advice would you give to investors, especially those who might be feeling overwhelmed by the complexity of the market?
Don't be afraid to ask for help.
Okay.
There are plenty of resources available, from financial advisors to online communities,
Right.
to help you understand the basics and develop your investment knowledge.
That's important. There's no shame in admitting that you don't know everything.
No, not at all.
Investing is a lifelong learning process.
It is, yeah.
And don't let fear or intimidation prevent you from getting started.
Yeah.
Even small, consistent investments can make a big difference over time.
They can, because of the power of compounding.
Right. That's the magic of compound growth.
Yeah.
Where your returns generate more returns.
Exactly. It's like a snowball rolling downhill, gathering more snow and momentum as it goes.
That's a great visualization.
Yeah.
Okay, and what's some other advice?
And remember, patience is key.
Okay.
Building wealth takes time and discipline.
It does.
Don't expect to get rich quick or chase every hot stock tip.
Right.
Focus on developing a sound investment strategy and sticking to it.
So it's about staying the course.
Yeah.
Even when the market gets bumpy.
Absolutely. And finally, remember that investing is a personal journey.
Okay.
There's no one-size-fits-all approach. What works for one person might not work for another.
Right.
So take the time to learn, experiment, and find what works best for you.
It's about finding your own rhythm.
Yeah.
And investing style that aligns with your goals and values.
Precisely.
Okay, I like that.
Yeah.
Now let's shift gears a bit
Okay.
and delve into another fascinating aspect of the market,
Right.
the role of innovation and technology.
Okay, cool.
We've already touched on the technological revolution
Great hat.
and how it's shaping various industries.
Yeah.
But what specific areas are you particularly excited about from an investment perspective?
Well, one area that I think holds tremendous potential is artificial intelligence, or AI. It's
AI.
already transforming various industries,
It is.
from healthcare and finance
Yeah.
to manufacturing and transportation, and its impact is only going to grow in the coming years.
Right, and we're seeing it being used for everything,
Yeah.
from developing new drugs to driving cars to providing personalized customer service.
Exactly, and from an investment standpoint, there are numerous opportunities to capitalize on this AI revolution.
Right.
You can invest in companies that are developing AI technologies, those that are utilizing AI to enhance their operations, or even, ETFs that focus specifically on the AI sector.
Okay, so it sounds like there's a lot of potential for growth
A lot of potential, yeah.
in that space.
Yeah.
Okay, what other areas of innovation are you watching closely?
Well, another area I'm excited about is the intersection of technology and healthcare.
Okay.
We're seeing incredible advancements in areas like gene editing,
Yeah.
personalized medicine, telemedicine, and wearable health trackers.
Right. And these innovations have the potential to really revolutionize healthcare delivery, making
Yeah.
it more accessible,
Absolutely.
more affordable, and more effective.
Exactly.
So for investors, it's an exciting time to be involved in this sector.
It is, yeah. There are companies developing groundbreaking new therapies, medical devices, and healthcare platforms
Yeah.
that are poised for significant growth.
It sounds like a sector with both high potential and a
Yes.
positive impact on society.
Absolutely.
Okay.
And let's not forget about the clean energy sector,
Right.
which is experiencing tremendous growth as the world transitions to a more sustainable future.
Right. With concerns about climate change
Yeah.
and the push for renewable energy sources.
Yeah.
I mean, this sector seems ripe with opportunity.
It is, absolutely.
Yeah.
Companies involved in solar, wind, hydroelectric,
Right.
other clean energy technologies, they're seeing increased demand and investment.
Yeah, and as that transition to a cleaner energy future accelerates, I mean,
Yeah.
these companies are likely to play a really vital role.
Oh, they are. They are.
So for investors who are looking for opportunities that align with both profit and purpose,
Right.
the clean energy sector is definitely worth exploring.
It is, yeah.
Okay, cool.
And beyond specific sectors, I'm also intrigued by the overall trend of technological convergence.
Okay, what exactly do you mean by that?
It's the idea that different technologies are coming together in new and innovative ways,
Okay.
blurring the lines between traditional industries
Okay.
and creating entirely new possibilities.
So instead of thinking in silos, like
Yeah.
healthcare, technology, energy,
Right.
we're seeing a fusion of ideas.
Right, fusion, yeah.
Approaches.
Exactly.
That leads to something entirely new.
Exactly.
Okay, that's
Well,
dope.
so, for example, we're seeing the convergence of artificial intelligence, biotechnology, and nanotechnology
Yeah?
to create like these advanced medical treatments that were once unimaginable.
Right.
We're seeing the integration of renewable energy, smart grid technologies, and electric vehicles
Yeah.
to create a more sustainable transportation ecosystem.
It sounds like a lot of exciting developments are happening at the intersection of different fields.
It's a very exciting time to be an investor. Yeah.
It is. It is. So for investors, it highlights the importance of staying informed
Yeah,
about these emerging trends
absolutely.
and identifying the companies
Yeah.
that are at the forefront of innovation.
They're pushing the boundaries. Yeah.
It's about looking beyond the traditional categories
Yeah.
and seeking out those disruptors and innovators who are really shaping the future.
The game changers.
Yeah, exactly.
Yeah.
And that brings us to another important trend that I think is worth discussing.
Okay.
The changing nature of work and the rise of the gig economy.
Oh, yeah.
We've seen a significant shift in how people work.
We have. Yeah.
With more freelancers, independent contractors, remote workers than ever before.
A whole new world of work.
It is.
Yeah.
So what are the implications of this trend for investors?
Well, it's creating both challenges and opportunities.
Okay.
On the one hand, traditional companies are having to adapt to this new landscape, and some are struggling to keep up. But
yeah.
on the other hand, it's also fueling the growth of new platforms and businesses
Right.
that cater to this evolving workforce.
Right. So we're seeing the rise of companies that provide freelance marketplaces.
Yeah,
Remote work tools, other services that really support that gig economy.
exactly. And for investors, it's an opportunity to to invest in companies that are enabling this shift
Right.
and benefiting from its growth.
Okay.
It's also important to consider how this trend is impacting traditional industries
Yeah.
and how companies are adapting to this new reality.
So it's about understanding the changing dynamics of the workforce
Yeah.
and how it's reshaping the business landscape.
Absolutely.
Okay.
Yeah.
Now let's talk about another trend that's closely tied to innovation.
Okay.
The rise of globalization and interconnectedness.
We live in an increasingly globalized world,
I do.
where businesses and economies are more interconnected than ever before.
Yeah.
So what does that mean for investors?
Well, it means that the investment landscape is no longer confined by geographical boundary.
Exactly.
You can invest in companies and
Yeah.
assets from all over the world, diversifying your portfolio,
Yeah.
tapping into growth opportunities in different markets.
It's a global marketplace.
It is. It really is.
Yeah.
But it also means that events in one part of the world can have like ripple effects across the globe.
Oh, they can, yeah.
I mean, we saw this clearly with the COVID-19 pandemic
Yeah.
and the recent geopolitical tensions.
Absolutely.
So globalization brings both opportunities
It does.
and risks.
Yeah.
And it's essential for investors to understand that global economic landscape
Yeah.
and how different events and trends
Yeah.
can impact their investments.
It's all connected.
It's all connected.
Yeah.
It's about having a global perspective
Yeah.
and considering the interconnectedness of markets and economies.
It's a global village.
It is. It
Yeah.
really is. Yeah.
Now let's touch on another trend that's often overlooked, but can have a significant impact on investment decisions.
Okay.
The role of demographics.
Demographics, yes.
So how are demographic shifts shaping the investment landscape?
Well, as populations age in developed countries and birth rates decline,
Right.
it creates both challenges and opportunities.
Okay.
For example, we're seeing an increasing demand for healthcare services and
Right.
products, as well as a growing need for retirement planning and elder care.
Right. Right.
These demographic shifts also impact, consumer spending patterns,
Yeah.
housing demand, and the overall structure of the economy.
Right. And we're already seeing those trends playing out.
We are.
And it seems like they'll only become more prominent
Oh,
in
absolutely.
the years to come.
Absolutely, yeah.
So investors need to be mindful of these demographic trends.
They do.
And how they might impact, different sectors and industries.
Yeah, it's about understanding the long-term implications
Yeah.
of these population shifts and how they might create
Right.
both opportunities and challenges for investors.
It's all about recognizing the long game.
The long game.
Yeah. Yeah.
Okay, so with all these trends in mind,
Yeah.
it's important to remember that the future is inherently uncertain.
It is. Yeah. No one has a crystal ball.
Right, we can't predict with certainty which trends will dominate or how the market will react.
Exactly. But by staying informed,
Okay.
being adaptable, and focusing on your long-term goals,
Yeah.
you can navigate these changing waters and position yourself for success.
So it's about having a flexible mindset,
Yeah.
being willing to adjust your strategy as needed,
Absolutely.
and not letting that short-term market noise
Yeah.
distract you from your
Okay.
long-term vision.
Exactly.
Okay, so let's switch gears for a moment and
Yeah.
talk about something a bit different.
Right.
The role of psychology in investing. We've already touched on how emotions can influence market behavior,
Right.
but I want to dig a little deeper into how our own biases
Yeah.
and mental shortcuts can impact our decision making.
Oh, I love this topic.
I'm fascinated by behavioral economics
Yeah.
and how our brains can sometimes lead us astray even when we think we're being
Mhm.
rational.
It's true. Yeah.
So it's a fascinating field, and it has really important implications for investors.
It does.
So one of the key concepts is cognitive biases,
Yeah.
which are these systematic errors in thinking that can lead us to make irrational decisions.
Right. They're like mental traps.
They are. They really are.
Yeah.
So can you give us some examples of these cognitive biases and how they might affect investors?
Sure. So one common bias is confirmation bias,
Okay.
which is the tendency to seek out information that confirms our existing beliefs.
Right. Expert speaker. We've covered a lot of ground in this deep dive, from global market trends to the psychology of investing.
Right.
But as we wrap up, I wanted to circle back to a point you made earlier
All right.
about the importance of understanding company earnings reports.
Right.
It's something that can feel like really intimidating to
but
new investors.
it's true. Those earnings reports can seem like dense
yeah.
and full of jargon,
Yeah.
but they're really just a snapshot of a company's financial health.
Oh,
And they can reveal a lot about whether a company is on track
right.
to meet its goals.
So where should someone even begin when looking at an earnings report?
Okay.
What are the key things to focus on?
First, look beyond just the headline numbers,
Okay.
Don't get too caught up in whether a company beat or missed earnings estimates.
Right.
Those estimates are just analysts' predictions, and they can be wrong.
Yeah, they're not always right.
No, not at all.
Okay.
Instead, focus on the underlying trends in revenue,
Okay.
profit margins, and cash flow.
So it's about understanding that bigger picture of how a company is performing.
It's not just focusing on a single data point.
Precisely. Look for consistent growth in revenue and profits over time.
Okay.
That's a sign of a healthy business.
Okay.
Also, pay attention to profit margins. Are they increasing or decreasing?
Right.
That can tell you a lot about a company's efficiency and pricing power.
Okay, and what about cash flow? Why is that so important?
Cash flow is the lifeblood of any business.
Okay.
It's the actual cash coming in and going out.
Right.
A company can report strong profits on paper,
Right.
but if it's not generating enough cash,
Yeah.
it could be in trouble down the road.
So a company needs to be able to actually pay its bills.
Yep.
And invest in growth, not just have impressive numbers on an earnings report.
Exactly. And don't just focus on the numbers themselves,
Okay.
Read the management's discussion and analysis section of the earnings report.
Okay.
This is where the company's leadership, explains the results.
Outlines their strategy, discusses the challenges and opportunities they're facing.
So it's like getting a glimpse into the minds of the people who are running the company.
Yeah.
You can learn a lot about their vision, their decision-making,
Yep.
and how they plan to navigate the future.
Exactly. And lastly, don't forget to compare a company's earnings report to its past performance
Okay.
and to the performance of its competitors.
Right. So you get a benchmark.
You get a benchmark. Yeah.
Okay. That's super helpful.
Yeah.
Earnings reports definitely feel less intimidating now.
That's good to hear.
Switching gears a bit.
Okay.
I've been thinking a lot about something you said earlier
Okay.
about how human nature drives the markets.
Right.
And it makes me wonder about the role of ethics in investing.
That's a profound question.
Yeah.
And it's one that more and more investors are grappling with.
Yeah.
For a long time, the prevailing view was that investing was purely about maximizing returns,
Right.
regardless of the ethical implications. But that view is changing.
Right. People are starting to care more about where their money is going
They are.
and what kind of impact it's having on the world.
Exactly. We're seeing a growing movement towards ESG investing,
Right.
which takes into account environmental, social, and governance factors.
Right. ESG.
ESG, yeah.
Yeah.
When making investment decisions. So investors are looking for companies that are not only profitable,
Right.
but also operating in a responsible and sustainable way.
So it's not just about profits anymore. It's
Yeah.
about values alignment.
Precisely. And it's not just individual investors driving this shift.
Okay.
Large institutional investors like pension funds and endowments.
Yeah.
They're also increasingly incorporating ESG factors
Okay.
into their investment decisions.
So it sounds like this trend is only going to continue to grow.
I think so, yeah.
So what are some of the key things that investors should consider? If they're interested in aligning their investments with their values.
First, do your research.
Okay.
There are many resources available
Right.
to help investors evaluate companies' ESG performance.
Okay.
You can look at ESG ratings provided by third-party organizations, read companies' sustainability reports,
Okay.
and engage with companies directly
Okay.
to learn more about their practices.
So it's about really digging in
Yeah.
and understanding a company's track record on issues like environmental impact, social responsibility, and corporate governance.
Exactly. And don't be afraid to ask tough questions.
Right.
If a company is claiming to be a leader in sustainability, but their actions don't match their words,
Yeah.
it's a red flag.
It's about holding those companies accountable,
Accountability, yeah.
making sure they're walking the walk,
Walking the walk, not just talking the talk.
not just talking the talk. Exactly.
Yep.
And lastly, remember that ESG investing isn't just about avoiding bad companies. It's also about actively supporting
Yeah.
companies that are making a positive impact on the world.
Exactly. It's about using your investment dollars to make a difference
Yeah.
and contribute to a more sustainable and equitable future.
I love that. Using your investment dollars to make a difference.
Yeah, I believe that aligning your investments with your values can lead to a more fulfilling and impactful investment experience.
Well said. And on that inspiring note, I
Yeah.
think we've reached the end of our roller coaster ride through the markets this week.
It has been a wild ride.
It has been a wild one, but as always, I feel like I've learned so much from our deep dive.
It's been a pleasure, as always.
It's been great having you. And as we've explored all the twists and turns of the market,
Yeah.
it's clear that staying informed,
Yeah.
adaptable, and focused on your long-term goals is key.
It's all about the long game.
It is all about the long game.
Yeah.
The world of investing is complex
It is.
and ever-changing, but by embracing continuous learning,
Yeah.
you can navigate the challenges and opportunities that lie ahead.
Absolutely.
Thanks for being our expert guide today.
It's been my pleasure.
And to our listeners, remember, keep exploring, keep learning, and happy investing.